So who is Fibonacci for? It's for traders looking for precision-oriented price levels in both directions. And it is very precise oriented because it's mathematically driven. And I say both directions because, what we'll learn to see is that Fibonacci is a trending tool, but, markets can trend. And I talked about there being no guarantees in the market. About the only guarantee in the market is the markets will cycle. They'll cycle up and they'll cycle down. Sometimes those cycles are shorter in duration. Sometimes they're longer in duration. And in many cases, what they're forming is a trend. And so we can measure, the trend in the cycles within that trend using the Fibonacci tool. Really, traders with minimal experience, if you're brand new and you showed up, say, hey, I want to learn how to start trading today. Well, Fibonacci isn't going to be the first place that you start. But I suspect that a lot of you have had some trading experience. You've probably heard of Fibonacci. You may know how to put a swing fib on your chart. But what got you here was the 5 other types of Fibonacci that you may or may not have heard of before. And so basically, traders that are interested in learning what many others may not already know. And I'm happy to share it with you today. So, again, what is Fibonacci for? It's used for in trading. It's a trending tool. We use it to identify potential reversal zones, potential extension targets, and each one of these definitions we're going to go through, and you'll see them on charts. Creating bi-directional levels of interest. For us as a trader or an investor, that means that's a particular area that we can develop trade plans from. Identify anticipated confluence areas, creating fib sequences, and probably most importantly that we use Fibonacci for is trade management for entries, stop losses, scaling out, and full position exits.